All right, what up, everybody? This is Jeremy with Escape Velocity Trading coming at you for another market bias update report for Sunday, September 8th. It is 3:30 in the afternoon, which means futures trading has been open on Sunday here, starting off the week for about half an hour. Before we dive into the charts, let's look at last week's trading. The previous week, I had been out at Burning Man and out of cell service, so hadn't been doing any trading, obviously, out in the desert. This past week, got in and did a bunch of real short-term trading here on the futures. You can see basically all of these were quick day trades coming in and out of the market for just a few minutes to hour or so max at a time, mostly shorting Bitcoin. You can see right here the -1 on this signals that I was shorting Bitcoin and then ended up taking a long position on crude light and a long position on Bitcoin, looking for a bounce, didn't get it. Basically gave back all of the week's gains that I had. I had been up about 3,200 total over these trades. And then on Friday was attempting to do a bounce trade on both crude light and Bitcoin because they were overextended to the downside. Didn't get that, gave back most of my gains, ended up only locking in $102.50 on my futures trading, but also had an options play, or excuse me, a long stock play here on FIS locked in just shy of 1,300, bringing the total for the week to a $1,372.50 gain. So moving out to the market itself, let's dive in and see where we think the market is going. Last week, the market failed to break out of this all-important level, ended up having a big bearish engulfing candle that totally took out the range of the last about week and a half and started a downtrend. So on the short term, we are in a downtrend. If we put this out to a weekly chart, however, you can see that we still haven't set a lower pivot low. So right here on the weekly chart, we are starting to see a potential for a double top formation, which is a topping pattern right around 57.21. And we have broken down below both our 9 and our 20 SMAs. So that is very, very important. We are below those, and the 9 EMA is actually looking to potentially cross below the 20 SMA here in another week or two if we do continue to get some downward pressure. Right now, you have to call the market on the longer term neutral because we are basically stuck in this range below 57.21 and all the way down basically to 51.10 would be that neutral kind of chop. Whenever you get to topping patterns in the market and you are looking at extra volatility coming in, and again, we're going to drop this back to a daily chart so you can see that volatility. When you see increased volatility at the top end of a range after a big prolonged run-up, you have to start looking at decreasing your directional exposure to the bulls and look to either at least decrease your exposure or look for shorting opportunities to help offset some of the bullish exposure for longer term positions. So this last week, like I said, I had been shorting a lot in Bitcoin, took a quick profit shorting the ES and actually ended up getting out of that position too soon. I really didn't want to hold a lot of risk over the period of time that the market was going to be closed from 2 to 3 p.m. On Thursday, just simply because the stop losses in the market will not work if the price moves while the futures market is closed. And so I didn't want to carry that overnight risk, even though I was targeting down to 5,400 as my first target, and then all the way down to 5,350 was my second target. I've actually now decreased that. I am expecting that we probably are going to get a slight bounce to start the week. And based on any economic data that we have Wednesday and Thursday, which we'll get into in a minute, I am expecting that we may come down and test into the 5,285 to 5,300 range on the S&P before this volatility shakes itself out. If that price level does not hold, we might even see lower prices coming back into the rising 200. But right now, my base case is somewhere around 5,300 to 5,285 after potentially getting a slight reprieve bounce here to start the week. Going out to the NASDAQ. Very similar, obviously increasing volatility at the top end of the range. Instead of having a double top, we did actually have a significantly lower high here come in. Still have a higher high potential coming off of this pivot here. So not too worried about the end of the end of the bullish trend yet. But this does signal, again, increased volatility. Not a great look. We are sitting right on top of the 200 period moving average on the NASDAQ. We are overextended on the RSI and in bearish territory on the MACD. I would not be shocked to see a bounce back up into the just shy of 19,000 range on the NASDAQ to start the week. And then we will see if we can come back up and retest this diagonal resistance line that is starting to form, or if we're going to come back down and retest the 200. Am expecting a little bit of a bounce, like I said, but we are not out of the woods here, and there is a lot of chop in the market currently. If we go out to the Russell, Russell similar, except we hadn't had that big bullish run leading into the choppy action. We had put in a high for the year of 23.20 and 50 cents. Since then, set a lower high, but a higher low so far. This pivot is not complete. We need to actually see the formation of a pivot here. My guess is probably coming back down to test the 2051 arena right at that daily 200 period moving average. Going out to our fourth index here, the Dow Jones. Again, double top, looking for some chop. I would not be shocked to see this continue lower, especially because this didn't sell off as much as the other indexes, mostly because when you have chop in the S&P and the NASDAQ, people tend to start moving into areas of the market that pay good dividends, so they can at least cash flow on their longer term positions while they wait for that chaos to kind of sort itself out. So this did get a little bit of stability from people moving into safer aspects of the economy and moving into places where there might be some dividend plays. But because of that, I also don't think we are going to hold this level if this volatility in the market holds. I do expect us to come back down and probably test the 39,000 level. Going out to Bitcoin. Bitcoin, you can see here pretty clearly why I was shorting and day trading shorting throughout this last week. We had just heavy selling pressure. We did end up breaking below and closing below the all-important 200 period moving average on the daily chart. That was not a great look. Ended up pushing down all the way down into around 52,000. Since then, over the weekend, we've gapped up and are attempting to hold here, but have not shown much signs of bulls really coming back into any significant fashion, and we have a ton of overhead resistance here, so not a great look on this. If we toss this out to a weekly chart, you can see that we are holding support on the 50 period moving average on the weekly time frame. If this level holds, which is currently just shy of 54,000, this could spell trouble, and honestly, I could see prices coming back down to the mid 40,000, somewhere right around 45,000 would be my target if this line in the sand around 54K gives out. If it does hold, I wouldn't be shocked to see a support bounce coming back up into probably 57 to 58,000, and then we're going to get into a battle there to figure out if the bulls are going to try to come back in and recover this all-important moving average, get back above our daily resistance lines, or if it is going to be a short bounce followed by another sell-off. So too early to tell on that. Have to look intraday for today, and then over the next couple of days, look to see where this next reprieve rally goes. If it's a shallow pullback and we only get back up into this 200 period moving average and then start to show signs of weakening and rolling over, that will be very, very telling. If we do break through these and come back up to the 65,000 line in the sand, that would be a change in character. And setting a higher pivot high, breaking out above this pivot high here would signal that we are likely to try to re-challenge all-time highs again. That is probably not in the cards this week. I am guessing probably not in the cards next week. I really think this is probably going to be stuck in the mud and or just showing some downward pressure continuing until the Federal Reserve rate meeting that comes out on the 17th and 18th. So about 10 days away from that currently. If we go out to crude light, crude light right here, I had tried to play a bounce and was early to the party on the daily chart, on the intraday chart, looking for a day trade. I did get the move that I was looking for, but I was just a little bit too early to that party and didn't have my timing quite right. So I did end up getting tapped out of that trade for a loss, as I showed at the beginning of this video. And that was one of the two trades that ended up basically taking back most of the futures trading gains that I had had for the week. Luckily, I did have a long stock play that I decided to take profit on, so I still turned a little over $1,300 profit for the week. Going out to gold. Gold struggling to break above the 2570 level. Honestly, I see this probably as just getting stuck and chopping in a range here between 2470 and 2570, about a 100-point range. Which way this breaks, who knows at this point. We do have a little bit of a diagonal support line that is underneath us here that has been tested 3 different times in recent past and still has quite a bit of room for it to potentially drop and still hold that trend line. So the bullish thesis for this is still intact, even if we do break down and come back down into our 50-period moving average, or maybe even a little lower, but not a great look. You would have liked to have seen this break out of that high base as we were developing, and it's just showing some weakness here. So probably has a little bit more time that it needs to develop. And then if we go out to silver, silver showing some downward pressure below its moving averages and looking to try to push down likely to about $27, just above or at our 200-period moving average. And then finally, let's go out and look at UUP, our US dollar index, trying to put in a pivot low here that would signal a slight increasing low. Did have a nice push back up into the 20-period moving average that could not hold above it, got knocked back down. I wouldn't be shocked this week, depending on our economic data that comes out, to see this challenge and try to break above the 20 SMA again. And if it does, likely coming back up to 2841, which is the 200-period decreasing moving average. Finally, if we go out and look at our heat map, this is 1 week performance as a percentage for the last trading week last week. And you can see there really wasn't much place in the market to hide. There were some good high-paying high-paying dividend stocks like AT&T or Pepsi, Procter Gamble, Philip Morris, things like that that pay high dividends did do well. But pretty much across the board outside of that, it was just a bloodbath. Nvidia down over 12%, Microsoft down almost 3%, Apple down almost 4%, Google down almost 7%, Meta down about 3.5%. Financials got hit pretty hard. JP Morgan down 4%, and so on. So there was just a lot of selling, a lot of profit taking at the top ends of charts, and people just locking in and shutting down their risk graphs going into the weekend. Looking out to the economic data coming at us, today is obviously Sunday, no economic data reported. Monday and Tuesday, also no data. Friday this week, also no data. Wednesday and Thursday, pre-market is going to be when the data this week gets released. So 5:30 a.m. Pacific Standard Time, both Wednesday and Thursday, we will have really important reports coming out. First off, on Wednesday, our core CPI month-over-month data and year-over-year data. And then also on Thursday, our PPI data month-over-month and unemployment claims. So keep an eye on the pre-market trading in the first 20-30 minutes of the market open on both Wednesday and Thursday to see how that is going to impact the markets. With that, guys, as always, trade safe. Let me know if you have any questions, and I am here to help, and I will catch you next week.